to stop using basic indicators immediately, because in this video I'm revealing my exact proprietary Ichimoku cloud settings specifically set for a market that trades 24/7, unlike the stock market, which will filter out so much noise and keep you out of bad trades, and then tell you exactly when the trend has actually flipped so you can confidently enter the market. You're not going to want to place another trade until you see the charts I'm about to share. I'll also be covering why a massive geopolitical shockwave just hit the markets and almost nobody's connecting the dots to crypto. While the masses are staring at Bitcoin continuing to struggle to break above 94,000 on that recent rally, the Venezuelan stock market just ripped 74% in a matter of days. And I am breaking down exactly why this dominant signal from the US might be the ultimate catalyst for Bitcoin's next leg to $100,000. But be warned, the long-term volume is screaming that this is a trap. And I'm unlocking this private strategy session that I hosted for our Altcoin Pro University members to show you why I am cautiously buying this dip at that $91,000 level and actually adding to the dip all the way up to a range of $100,000 or even $107,000. But why I believe we are still in a macro downtrend that could wreck anyone that is a latecomer or overly bullish, and how to track relative strength on something like an XRP versus a Solana, which is lagging behind on this last rip and rally. I'll give you the critical 4 horsemen levels you need to master, but you have to watch in order to survive the volatility that's coming in January. And we have had a nice little start to the year, with Bitcoin on the daily rallying nicely just above that $90,000 level. Again, a very key level that I was covering and talking about not only on the channel, but with you guys. And as you can see, into the 94,200 range, between right here, that $93,000 to $94,000 range, we've seen a bit of resistance. However, I am liking this nice little red candle and wick where the price, although it struggled to get above 94,000 and hold, even with the sell-off back down to 91, what did we see? A lot of buyers step in and buy the price right back up to 93,000 on the close. So even if we get a bit of a retrace back into this range, as long as now we can hold arguably just above these candlesticks right here, where each one of these either closed or opened, I think we're going to be in healthy territory for another little leg to the upside, and I'd say bare minimum $100,000. Now, the reason this is all happening, you could argue we were deeply oversold, and sometimes the market likes to have a bit of a catalyst, right? One of those catalysts being Venezuela and the US essentially asserting dominance across the Americas and sending a message to Russia and China that we are in charge in this area and region, and now we are in control of the world's largest oil reserves. I think that is a very strong and powerful message, which is likely going to send markets flying. Already on the day, the Venezuelan index and stock market is up, and not day, but through this last couple of days, 74%. Which is a major move. And again, I think that's a good signal that, maybe the market wants to turn around for a bit. Now, that said, it's also important to note, okay, well, one, we were oversold. Two, we're starting to see, a cool down in just how much, the market was dumping, and we put in what? A new higher low. So before this happened, before the raid, think about this. It's almost like the market was telling us what was going to occur, and all we needed was one, what's the word I'm looking for? One fundamental thing to happen, something on the fundamental side, some piece of news, some catalyst in order to push the price for a rally above the $90,000 range. Although multiple times we were talking about how, look, we've really started to see a contraction in the price between 90,000 to 86,000, tightening range here. We're no longer putting in new lows, but instead we put in a higher low above the previous range lows, right? And so a break break above the $90,000 range would be pretty bullish. Now, did anyone know or could they predict that this was going to occur? I would argue no, because Trump didn't even tell Congress that he was going to go and do this. Because, and arguably very smart, because if he did, he said they have a tendency to leak things, right? Things just leak to the press over and over. You can't trust anyone in Washington, and that would have screwed the entire operation up. Now, many people have opinions on, what's occurring and what's going on. I put a video together on the channel recently about that, and I do believe it's mostly about dominance in this hemisphere of the world. And I think it's actually a really good thing for the U.S. dollar over the long term, especially when we start to adopt new technologies like blockchain and crypto. So that said, I think all of those catalysts combined are what pushed the price of Bitcoin up to the $94,000 range. Ethereum right back up to its prior range high over here at 33. XRP actually breaking and holding just above the 225 range on the daily time frame. And if we're to look at volume, you can see volume has expanded and increased even with this sell-off. So I don't really worry about seeing big red candles as long as, look at this, contraction. And what do we see here? Expansion, which means bigger green candles can come and enter. Now, that said, there is a lot of overhead resistance. This thing was deeply oversold. We did see a very strong contraction here, which tends to lead to expansions. Even if we came right back up to the 250 range, 260 range at most, I would be very cautious in these ranges here, at least in the on the buy side, because we're going to face still a lot of overhead resistance, and this still is a downtrend. You have to remember, if we put in a low here or even a low, or excuse me, a new higher high right here, at the end of the day, this is still a downtrend, which means we have a lot of, and here's the thing, right? If you're buying right here at 230, expecting this thing to pump to 270, 275, not a bad play considering you're closer to the bottom of the range. We're above support, but maybe play something like the 10 and 20 EMA, right? If we do see a retrace and these things start to catch up, maybe it chills out for a few days back in the 225 range, then is where I'd start to add to a position to the long side and watch it closely up into these range resistances. But from the weekly perspective, right, we are very close to a major resistance. So on the weekly 40 simple moving average, you can see that we were supported once. And because we've turned over and because we broke 4 new range lows over here, at least from a daily perspective in closing, even with the contraction, it leads me to believe that it's possible that we see some sort of a sell-off, potentially even back down to $2. We see a bit of support here, and this could have actually been the bottom into 2026, right? That is possible. It's also possible that we just sell off further and we go for new lows. So since nobody knows, right, you have to prepare for all of those scenarios and watch range resistances or supports closely, which I cover in Technical Analysis Essentials under the 4 Horsemen if you're new or watching a replay, right? Just watching those horizontal supports and resistances using a few key indicators, I think you'll be fine. So that said, it's okay to take a little position here. Personally, if you're not already in and you didn't buy here, which is where kind of I've been telling people, hey, if we break above, the $2 range, we're going to look good up to 225. Watch it closely. On Bitcoin, it was about $90,000 right over here off of those wicks, which is what we covered last week. Let me remove those drawings, right? A break above here, great. A break below, not too great. So I took a position the moment we entered just above the $90,000 range. I'm currently sitting in it, watching it closely, and I'm not going to sell this position anytime soon, even on a retrace back to 91,000. Maybe if you haven't entered already, not a bad place to enter. Now, that said, if you're not in and you're kind of FOMOing, understand that you might be down buying at 90,000 if it retraces, but this isn't something, your timing is just off. You didn't catch it, right? So sometimes it pays to just have an alert. You click on this guy, click add, and then you can actually have a value crossing, okay, on Bitcoin for a price and change the price here. You can have it crossing up, crossing down, pretty straightforward. And what's nice about that is you can have it send you a message saying like, hey, BTC buy, right? And so from there, you can have it send you notifications. You can have it send you a text. You can have an email. You can notify in the app and turn on your app alerts for TradingView, and you'll be good to go. So that said, Let's see here. This is kind of where I'd be entering if I'm not already in. However, just understand with this wick, it's possible that we retrace just a little bit and then a day or two from now, boom, back up again. Volume on Bitcoin. Notice contraction, slightly really tight, lots of selling. But look at even with the bigger red volume bars, notice what's happening in these ranges. We're not getting new lows, which means, okay, there's some demand here. Someone's stepping in and buying, and it's not allowing the price to go any lower. Now we're seeing, oops, let's go here. What are we seeing? An expansion of the green volume bars into what? A breakout in a range high. So again, this is important to note because this is all stuff that I teach. It's very straightforward. Let me admit some folks here and we'll move forward. So that said, what I want to cover today, okay, things are looking pretty good. We'll cover maybe a little bit more on the price action here shortly. I'm definitely bullish in the short term over the long term, right? And by the way, if this is our major range low, right? And we can somehow get back above probably the most important range resistance that we're going to have here, $107,000, then this is truly, I would just say, a very slow moving market in a very long, extended bull market. It's possible that into 2026, we just see a new all-time high sooner rather than later, maybe into February, March, April of this year, potential new high to 140, 175, and then we start a bear market. Me personally, I'm in the middle, honestly. I still believe that we're going to get a retrace over to, somewhere in this range of 100 to maybe just above this range high, break back down and put in lower lows. Only because the volume looks, pretty nasty from the sell side over the long term. And again, this is something that we've been talking about. I've been covering it with the team over and over. It looks like we've sold off pretty deeply. We're overdue for a retrace. The catalyst came in, looks good. And I think a lot of people think if this is the bottom and they're buying here and here and here into FOMO, I think a lot of people are going to get wrecked. And I think that's a very likely scenario. I really do. So I would be cautious about over investing, going all in, especially with the majority of the crypto market rolling over. A lot of things are going to start to perform well, maybe make you want to FOMO cryptos that people are talking about. You're going to see a little bit of chatter on Twitter and YouTube about a new thing. I would argue just stay away from all of that and focus on the majors in an environment like this. Because if this catalyst isn't enough to really, set the tone for the rest of the start of this year, or excuse me, the start of this year into the rest of the year, then I think we started the bear market. And how long the bear market goes, I don't know, right? It could be an entire year, it could be 3 to 6 months. More often than not, bear markets last a lot less. Bull markets last a lot longer. And it's important to note this is very late stage. We've rolled over. The bull market has been literally on since our new range highs here in January of 2023. That is a long period of time, ladies and gentlemen. We're talking till present day from the all-time high, almost 1,000 days, okay, of trend and upward price action. So I wouldn't be overly bullish here. Again, especially just because looking at the volume, yes, we were overdue for retrace. Yes, we built a nice strong base here. And if I were to just remove all those drawings, right, and we're just looking at this thing, like one, okay, again, major overhead resistance, deep sell off, loads of volume. So from the lower time frames or EMAs, SMAs, in this situation, you could argue, oh yeah, buy, and I agree, buy for maybe a little move back up into a new local high. But even if you really have to think about this, like a lot of the times with even Elliott wave theory, here's your A wave, right? Here's your B wave. And your C wave can come to 100%, 160%. It can come, and be truncated, right, for like a 60% move. But look, either way, a C wave would take us back down here. And so this would be very, legit. I could totally see something like this happening where we pump right up here. And I would argue this is probably a likely outcome if you're thinking from the perspective of a truly bullish institution. You see all of the current macro environment. I'm actually right now bullish on the dollar. with this current, development. I think it's probably one of the most bullish developments we've seen in the last decade for the dollar, alongside stablecoins and stablecoin issuers being the large, of eventually going to become the largest holders of U.S. Treasuries. I think that's going to assert global dominance for another decade at least of the dollar being the world reserve currency. I really do, because now Saudi Arabia and BRICS nations and all these countries, like, they're just not going to be as they could be economically strong, right? But with 303 billion barrels of oil, that is insane. With the fact that almost every single country, anywhere you go, you really think about this, right? They still want to transact in and hold dollars digitally, right? Through their wallets and phones, right? So unless they look like North Korea and they're not allowed to have social media, they're not allowed to have a cell phone or access to the internet, all of these people are not going to transact in their own currencies, their local currencies. They're still going to want dollars. And now, with the current development, I really believe this is going to set the tone. And although many countries might try to denounce and have their opinions, and my personal opinion and take on this is that it won't matter, because everyone's going to need the US more than we need them. Okay. Especially now with manufacturing. And you could say, well, prices are going to come up. Like, inflation's always going to be there. And I think that's why the likely outcome in the long term, or even over the next, I would even say into mid to late year, maybe sometime October, November, December, the likely outcome would be that we go for lower lows. Because if I'm an institutional player and I have conversations and I see what's happening in the global economy and inflation and the middle class and the dollar, even with dominance, the dollar is always going to be devalued. 10 years from now, taxes are going to be higher. 10 years from now, we're going to have greater inflation. The dollar is going to be worth less. What is one of the only major safe haven assets and new technologies that's going to dominate globally, right? You could argue, yes, stablecoins, but it's blockchain. It truly is blockchain and digital gold. So even just that narrative, right? Digital silver, there's always going to be those types of things. I think those types of narratives are going to win. And if I'm an institution, I want to buy Bitcoin at 65 to $50,000. And I want to buy as much of it as I can. Period. End of story. Looking at the trend, knowing that even on the low end, let's say it never went to $1 million. If it went to 250, is that realistic and possible? Yes. Why am I not trying to short the crap out of the market in a weaker environment from the technical side? Get people to buy in right here, short the crap out of it, make money on the way down, buy more down here. Like, me personally, that would be a really, I would think that's a smart play. And I think they could do it, especially with the weakness in, let's see how far the retrace goes. Let's see if we start to sell off at 100,000 or even 105, or potentially even just above the range high. Either way, this would be a new lower high in a downtrend. So, me personally, still relatively bearish, but I'm bullish for the short term. So I'm kind of excited about it. It provides some plays. I think it gets people excited. People in Altcoin Pro want to tune back in. It's always how it is, right? But let's get into Ichimoku Cloud. I do like this indicator. So what I'm going to do is pull this article up, and we'll kind of just cover it really quickly. Then I'll dive into a few questions if you guys have them. But basically, the way that Ichimoku Cloud works is it's like a whole trade system. I can't remember when it was developed. It probably says somewhere in here, but you have a lot of lines and things that pop up on the charts. Ultimately, your goal is not to look at all the lines and use all of the signals. Your goal is to wait for a signal where they all occur and point to either fully bearish or fully bullish. Okay. We covered it just a little bit last week. But let me see here. We don't need to cover a bunch of the history, but it was in the 1930s by a guy of the name Goichi Hosada, Japanese. And candlestick charts were developed by the Japanese as well, trading the rice markets, I believe, in the, I want to say 1700s or even earlier. I'd have to double verify. But the way that this works is it's kind of simple. It's a little bit more choppy looking, okay, than, let's say, an SMA or an EMA. That's kind of a smoothed line. So for those of you guys who are newer, or maybe, you don't really know what I'm talking about, a lot of you guys always hear about an EMA. Okay, an EMA and an SMA. EMA is going to be slightly more fast moving than an SMA, even on the same time frame. So when we talk about like something like relative strength, right? And I've covered this many times with you guys. When a crypto is strong, relatively to the market, I'm talking about, is it up? Let's say everything is up on the day. You've seen this a lot, right? Like, let's go to coin market cap, right? You can see that over the last 7 days, percentage wise, almost everything is up except for a few tokens. Does that make sense? Right? Relatively speaking, a lot of them, are up. So what's relatively stronger? Well, then that's where you can say, well, I don't know, but all we have to do is look at the percentage gains. It seems XRP over the last 7 days is relatively stronger than a BNB, than a Solana, than a Tron, right? Dogecoin is really close up there. So relative wise, and this is a very simple approach to looking at relative strength versus the RSI when we pull that up, right? And I've covered this before, but it's always good to remind those of you guys who are new. The RSI, this is relative against itself. So the upper band here, right, it's kind of like a rubber band. Here in the middle, it's like equally as strong as it's been for a little while. Down below, relatively, it's weak against itself. Up here, it's relatively strong against itself. However, and notice what I'm saying, relatively strong. In other words, the price has been strong relative to what? The last how many periods? Let's look at it. When you pull it up on there, it's always 14 off the rip. That's just the base settings. I could change this to 20. Who says I can't? And look, now it's 20 periods of time. In other words, 20 days. Why? Because I'm on the daily, right? So, right here, I'll just leave it at 14. That's your base. That's 14 days of time because, again, I'm on the day. And so this is actually strong. And a lot of people would argue, well, now it's oversold when it gets up here. And sure, right? If you're looking for a signal here and there, it's not always the best signal. The larger the time frame, the better the signal. If this is on a daily time frame and it hits like 87, 89, 91. We've seen this in the past. More often than not, it really is like extremely like strong. And so that would be overbought. And at some point you could short it a little, but listen, you hold a short for too long, you're going to get wrecked because I've seen it happen a million times over. This when that first spike happens for relative strength, you don't often want to short the market. You want to wait for a little bit of a retrace and a long and buy the market because the market's giving you a signal. What? That I'm strong. You really want to go and fight the strength, or do you want to be on the right side of the tide with the strength? Right. So that's kind of like a common misconception that people have with tools like this. Either way, this is relative against itself. So if I go back 14 days, relatively speaking, we're at 62, which means this thing is stronger than it has been over the last 14 days. That's all that indicator means. Now, when I pull up an EMA, okay, something like this blue line here, and I remove, let's just go, and it always pops up at a 9 time frame. I don't know why. Let's just do this at 20, okay? Oops, not 920. It's crazy. Not just 20. And we'll leave it there. Now you'll notice, right, if I remove the chart, the price action. Just keep the line, the blue line right there. And you can change the color, you can change the look, whatever. Hide. What is this thing doing? It's literally just the price of Bitcoin, but it's smoothed out. Okay. It's a little bit more choppy. Now you'll notice right here, if I pull up this guy and put it to a 20, an SMA, okay, watch the line that I pop up. Notice how it's still pretty much overlaid, but it's slightly different because the EMA and the SMA use slightly different math. Okay. Now, look at how kind of choppy the EMA is versus the SMA. See how it's a little bit less choppy? It's got a little bit, this guy, in other words, the EMA, what it's doing is using math to essentially prioritize more recent price action. So it moves tighter with the more recent price action of the time frame. And so sometimes I like using an SMA to keep things really simple. Again, simplicity sometimes is the best method or approach to making smart decisions when it comes to investing or trading. So that said, I'm just going to leave the SMA on there. Now look at this. Ready? If I do 100, okay, what is this doing? 100 periods of time. Look how smooth this thing looks, right? Nice, steady trend. You can see that through this period of time, Bitcoin flatlined, steady trend, kind of, slight downtrend flatline, slight downtrend flatline. Now we're really down to 99 on the SMA, okay, not actual price. Um, and so either way, actually, let's look at the price now. Let's see this. Look it. Right? So we might face a bit of resistance there. Sometimes that's not always the case. You'll notice that if it doesn't always like in the past, right, really support The reason, better yet, if you're looking at it and at no point in time did it really respect this line, notice how it's just pumping through and above and below and kind of support, but anyone can find what they want on a chart. I would argue, like right here, probably not a great look. Also, right here, except for the one time it sold off here. I would argue the 100 SMA is probably not a great indicator to look at on Bitcoin currently. So, in other words, if we pump above 99, I wouldn't sell at 99 just because the SMA is there. Only when you see a confluence. Maybe if I didn't know the SMA was there and I'm like, oh, but look, we saw a decent amount of what? Support there, right? In the past as well. Once, twice, three times, four times, breakdown. In other words, now the SMA there adds a bit of weight, but I wouldn't use the SMA as a priority. Okay. That's like secondary, right? Tertiary would be fundamentals. So, unless of course you're like a true insider, like if you know someone's going to get bought out, right, and still protect against your risk because anything can fall out, fall through. I've seen that over and over. I've seen people in the past they actually get really good inside information. They buy, they put their net worth on the line for this deal because like it's going to happen and I'm going to make a stupid amount of money on a merger, blah 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 blah, and then a deal falls through and they're cooked. They lose all their money or they lose a stupid amount of money because they over leverage themselves. So that can happen too. So that's why I, even with inside information, nobody actually, like maybe a few people in the world, Donald Trump, right? But like at that point, he's already stupid rich. He doesn't think as much about, maybe he does, money, but I think he really just kind of does what he wants and also makes money. Those are like insiders. You and I will never be there. And if you are, let me know. Uh, I think the confluence here matters more now, okay, at this point in time. So now we're looking at this smoothed line. I'll put it back to like a 50, okay? And this is why I'm saying this, because you'll notice how smooth the SMA can be. Okay, let me remove this drawing here. Let me pull this up. Let's go ahead and hide. This is a pretty smooth line, right? Now let me pull up an Ichimoku cloud. So if you go to your indicators and type in Ichimoku, oop, I said Inchi. Okay, it should pop up and look something like this. Ichimoku. That's all you'll see. Okay, you might see other ones down here and all this stuff. I made a few of these custom. Doesn't matter. It's not a big deal. I'll show you how to change it if you want. Pretty straightforward. Okay, and you'll notice that. Look at all the stuff that pops up on here. Kind of overwhelming and scary. You'll notice it still follows what? Bitcoin and the trend. Do you see that? So it is a system, and if I remove it, look how simple this system is, right? Versus this one. Okay, but ultimately it's kind of doing a lot of the same things. You'll notice another little interesting correlation. You'll notice that this green line looks almost exactly like Bitcoin. So we'll come over here and we'll leave the lagging. Where is that right there? So we'll just remove everything else, including those. You'll notice this looks exactly like Bitcoin, the lagging. Okay, it's the price. But it is 30 days back. If I pull Bitcoin back up, do you see? It's just backward. Okay, that's the lagging span. It's actually very helpful to let you know whether you're trending strong or not, whether the market's had time to trend. Okay, we'll remove that and we're going to turn off Bitcoin now. Hide. And we're going to focus on the conversion and base, which are the Tenkin and Kijun. In the Japanese, they call the blue line, okay, usually just off the rip. This is again base settings. It doesn't have to be blue. You can change it to anything. The Tenkin line. This one is called the Kijun line, okay? It's essentially like a slow moving and a fast moving average. Okay, the math is obviously slightly different than something like an SMA because you'll notice it's not as smooth and they are a little bit more choppy. Okay, but whenever you get a crossover on the Tenkin, the fast moving, very similar to EMAs or SMAs, for example, this one. Let me turn this off, right? Blue line above orange, red, whatever, 10 EMA above 20 EMA right here. Okay, bullish signal. Kind of like, has anyone ever heard of a golden cross, a death cross, very lagging, 50 and 200? Everyone always hears about it, talks about it. I don't like them at all. It's way too lagging. It's way too slow. By the time you're selling a death cross, the market's turning back over. Don't do that stuff. It's crap. But right here, right, this is a little bit faster moving. So it's holding tight with the price. Notice right here, if you bought, let's just see what happened. And you can already see it on the SMAs, right? Turn this back on. Interesting. Price supported, 10 and 20 EMA crossed over. Price consistently supported, maybe get out around here. Okay. And before we dive into the video, if you haven't already, we still have a few spots left for our accelerator program where you can get access to one-on-one coaching directly from the Bull Runners and Altcoin Pro team to secure, grow, and scale your portfolio. You can actually sign up for a free call by clicking apply today, but I would recommend you watch this video first in order to make sure that it's actually the right fit for you. Either way, it's a free coaching call and you're going to get a ton of value from it. But the last time we had this program open was in July of last year. The next time is going to be 5 months from now once all those slots fill up, because this is one-on-one coaching. We do have to close the doors once we hit capacity. Otherwise, we can't service our clients properly. Be sure to check that out. If you have any questions, you can check out the commonly asked questions or ask us on that call. Either way, we have tons and tons of clients that have won in the past with us and will continue to win into 2026 with this program. So be sure to check that out by clicking on the link in the description of the bio below. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. And really quick, if you are enjoying this video and learning a lot, then you're going to love Altcoin Pro University, your one-stop shop to help you achieve your goals in crypto and in your investment portfolio in 2026. And you're going to want to take advantage of that rather soon because the market is changing rapidly. It's dynamic. We're off of a recent high and a pump. And the Altcoin Pro library is chock full of everything you would ever need to know, from supercharging your investment and trading to mastering DeFi to taking advantage of yields upwards of 20-30% sometimes, the how-tos of bridging and staking, and how you can essentially put to work in 15 minutes of your time once per week your crypto to earn more than enough income to not only pay for this membership, but arguably even to earn an investment income off of it. Now, I can't make any guarantees, but this platform is so good that we have tons of people and members leaving us reviews on Trustpilot, which has netted us a 4.6 star rating, and you can go ahead and read those for yourself. But our promise and guarantee to you is that the value is far greater than any price you could ever pay to be with us. And if you're not 100% satisfied in 14 days, then go ahead and ask for a complete refund and you will get your money back. Now let's dive back into the video. Now, look, you're going to get some of these. This is why it's important to know trend. This is why it's important to know horizontal supports and resistances, right? Buy back in where? 10 and 20 EMA cross back over, breakout just above the 111, pumped hard to 123. Made some money. So protect against the risk, right? In a bull market, it depends on your strategy, right? Are you swing in this thing? Are you only an investor? I wouldn't sell here if I'm an investor right away. I'd wait for, some major things to happen. But from a swing trading, day trading perspective, there's a lot you can do with these tools. So that said, you'll notice that the Ichimoku, similar, right? So look, right here, let me remove this. And by the way, these are not the settings that I use for crypto, but already you can see that the Tenkin crossed over the Kijun. Blue line above, red line bullish. Red line above blue line, slightly bearish. Okay, pretty straightforward. And then finally, right, if we pull that lagging span on, actually I'll leave that off. We'll leave these off, and I will go into the Kumo cloud. By the way, you'll notice that these are the upper line, lower line, leading span, lagging span. Let's see here what happens. I don't actually know where those popped up. Probably over here. I'm not going to focus on those. So, oops, a sec. Let's come over here and just turn these off. I don't want these lines here. They're too messy. We'll just put the plots on. This is what you call your Kumo cloud, okay? And whenever you see the cloud flip like this from green to red or red to green, this little portion right here is called a Kumo twist. So you'll notice something is also similar between the cloud and the lagging span, which is the fact that the lagging span hangs out behind price. The cloud hangs out before or ahead of price. So not before, but ahead of price. So it's kind of nice because this system really kind of keeps you out of sideways moving ranges, if you will. Some people overtrade in those, get wrecked. They pay too much in fees. They have their stop losses hit. This system kind of gives you a whole overview, kind of like a 30,000-foot view of the market. And whenever you get all of these in alignment, bullish, 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 you actually can then place a trade and it's going to be a far higher probability trade. Okay, so it is kind of nice. I do like using. I haven't used it in quite a while, and I'm currently working on building a system around this and see if we can use it well. But that said, the system that most people would use with this tool, you'll notice one thing here. Okay, let's turn these back on and keep it there. Messy, yes. However, let's go to, we'll leave it on the daily for now. Okay, the settings. Now, on the inputs right here, you'll see 9, 26, 52, 26. These are the settings for the conversion line at 9. We're very similar to an SMA. 26, by the way, you don't need, I don't know if you need to take notes on this. If you're taking notes or like, this is just base settings and this is designed for the stock market. Or smaller time frames, but usually the stock market because this is like 52 weeks in a what year, right? And so this thing trades not 24/7, the stock market, and that's kind of before crypto and 24/7 markets. And let me X that out. This is kind of the settings that were there. But for crypto trading 24/7 and having a bit more data, I do use a different set of timeframes. And it depends on the time, whether I'm trading a daily, an hourly, a 4 hour, a weekly. So I'm going to give you my base settings for the daily to keep things simple. And I think this is going to help a lot of folks just to know kind of, okay, is everything flashing green? Now, realistically, probably not right now. It's probably flashing green for a short minute, and I'll explain how you would take a trade on this, okay? But I keep my settings pretty straightforward. I go to 20, oops, not 920, 20, 60, okay, 120, and then I do 30 here, okay? That's the lagging span. And right here, you can see, interesting, right? On a daily time frame, right? You'll notice the lagging span. Okay, so there's some things that we got to look at first before we go in there because right now it's not looking it's looking like okay, this thing's ready to move and can potentially move through the cloud. By the way, whenever price enters the cloud itself can act as a resistance. See how fat and thick the cloud is here? The bigger and thicker the cloud, if price enters the cloud for whatever reason, you do end up seeing an edge to edge move. So price could break above here, move to 103, and then see resistance at the cloud, which is an interesting concept. And I don't know why that is. I just know that I've seen it happen before. Okay, but let's come over here. Here's a good example. You'll notice how price was tightening in the range. And this is why I do like using my own basic technical fundamental and like the fundamentals of technical analysis, I should say. Okay. You can see that right here, we have a decent amount of resistance, right? The very first breakout, but resistance once, twice, 3 times, 4 times, 5 times before breaking for new highs, right? This right here is a good indicator. Volume 2 confirmed. Did we get volume in that range? Look at this. Look at the volume expansion. Look how awesome that is. Ladies and gentlemen, volume is one of the best tools on planet Earth, period. Okay? If you're doing indicators, if I had to drop all indicators ever and only use one, it's volume. Everything else is a drawing tool and just looking at the chart. Okay? This is an actual indicator. Okay? However, drawing tools are as simple as this. Draw a line. Grab it, drag it, drop it, right? Indicators are more built on math, okay? And they use the chart and the price action and other things in terms of data in order to spit something out on the chart that you didn't draw. That's an indicator. So volume did expand into the range. So I'm already using my fundamental approach, which is the 4 horsemen of technical analysis, okay? That's my baseline. Then you go ahead and toss something like the Ichimoku on, okay? 20, 60, 120, 30. And then let's just look at what occurred here. Now, there's a couple of things that you'll notice are bullish first. So let's go ahead and go into the style and remove, let's keep those two on. Remove the lagging span, remove the cloud. And just focus on the fast moving, slow moving. Okay, first. Notice that right here, there's a bit of a lag, right? And anytime you're using time frames like this, it's lagging. Why is it lagging? Because it needs data from the past to spit out the present output, but by then the move already happened in order to give you the output. So you don't, using one or two indicators, this is why it's always kind of important. Like it's harder than most people think. There's so many gurus out there or people selling a tool, okay, where the tool, they're like, look how simple this is. If you just buy right here, you make money. If you sell right here, you just make money. And it's not actually that simple. If it was, everyone would be rich. Why are you selling the tool? Right? It's kind of like the gold rush, right? The people that made the money in the gold rush were the ones selling the picks and axes and shovels, right? So, in similar fashion, it's not always that simple. Using one or two indicators or lines is not. It's miss a lot of the move, right? And the bigger the line, or the bigger the time frame, I should say, for that line or indicator, yes, the higher the probability that you're in the right area. The problem is that most of that move has already happened. So imagine entering somewhere where it's like now it's giving bullish, but by that point it needs to sell off a bit, and then people have emotions and they capitulate or they sell. They're like, I bought at the wrong time. They sell. The market then moves in the direction when they should have just waited for a retrace, then entered, then the market moves in their direction. So with this guy right here, what time is it? 4:45. Cool. So we'll get off in like 10 minutes, give you guys a good look at this thing. But I gave you the settings. Conversion line baseline. You want the blue line above the red line, like this. Okay. But you'll notice it happens multiple times, right? Here, 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 and here. Okay. And finally stuck above. So here is where you wanted to get in, not back here, which is why again it helps to have your fundamentals down, not fundamental news, but like the fundamentals, the four horsemen: horizontal support and resistance. One, two, the Ichimoku, even if I didn't have that, would have told me to stay out of it. Look at this. So let's turn those guys on now. Okay, and I'm just going to put the lagging span on. Whenever lagging span is actually above price, notice how this one's inside of price, the green line. That is not a strong trending market. That is a sideways moving market. Does that make sense? So in and out constantly of price, not great. Okay. In this case, strong trending market. Notice how the lagging span is above. Notice how price is above the red and blue line. Notice how we're being supported at a blue line, sometimes at a red line, not always. Okay. But sometimes, like we did, like kind of right here. Okay, so this is kind of like a whole system. Now let's just go ahead and turn on the cloud. And notice that even the cloud provides a good range and read. So like moving forward, let's replay into this range right here. Okay, let's replay to like right here. So I'm not getting all of the signals I need, okay? The cloud is red here. If I see a red cloud and price is below cloud, price is currently seeing resistance at red line, blue line. Blue line is above. So some people would say this is how EMAs work. Sometimes they'll have one above the other without any other approach. And because that happened, they're like, I need to buy. Like fast moving average above slow moving average, buy. That's not always the case. Ichimoku would have kept you out. First and foremost, price is currently in a what? Local intermediate downtrend. Okay. Already, I don't want to buy that right away. Okay. I want to break probably for a new high, realistically. One, but two, even with the blue line above the red line, the Tenkin above the Kijun, okay, price is not above those two. I want price above the two. I want Tenkin above Kijun, but I want price above them. I want the lagging span, this green line, to be above price and into a new territory. If it was up here, then the price would also be following. Three, the cloud is red. I don't want that. I want green cloud. This Kumo twist forward is not good. Now, what I do like about these very tight ranges and clouds is it's easy for price to move above. Whenever you get really thick clouds like this, in the past, let's find him. It's harder for price. Like these ranges right here, I've seen in times where price will break into here. It's harder for price to get through that cloud, the thicker the cloud. So unless you've really bottomed out. But by the time you bottom out, you create tight price action, which creates a tight range in the cloud. And a tighter cloud is easier to break through. So it's kind of one of these things where it gives you a lot of data, but what's nice about the data is it keeps you out of bad trades. Okay. So in this case right here, you'll notice we're flat right here, very tight cloud. We're not really seeing anything super bullish, and we'll just play it for a second. Again, look, tight, 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 cloud, price. Okay, interesting, right? Do we break for a new low? At this point in time, it's possible. Now, this is a bearish move, right? Look at this. You could actually short sell using this tool, but I'm going to keep it simple for the sake of this example and just think about longs. If you're only wanting to buy and hold spot long, this is not a bad approach. Notice right here, we almost had a short sell either way, but look, immediately this green line moved right back into price. Stay away. That's it. Stay away. Okay. Notice how we're in the cloud and we saw a little bit of resistance at the cloud. Notice how the red line is above the blue line. Still not bullish enough yet. A lot of people FOMO because it went from 53 all the way up to 60 and they would have bought that when the market might need more time. You don't know, right? Nobody knows. So again, this is literally just telling me stay away. That's it. That's all it's telling me. Now, look, something's interesting is happening, right? We're starting to move to the upside. But notice we have a horizontal support and resistance at 64. Notice that the green line is still inside of price, not super bullish yet. Notice the blue line is below the red line. And notice the cloud is still what? Red. So even with this nasty move from 54 all the way up to 64, a lot of people FOMO, I would have stayed away just using this tool. Actually very helpful for staying away from, ranging markets where you might get wrecked. Especially a lot of people, the problem is they're buying at 61, 62, hold for 64 and then immediately dumps and then they capitulate, right? And like that's no fun. So it's a very good system to just filter how often you trade. The fewer the trades, the more likely you're going to be successful actually. Now, that's not to misconstrue it with practice, right? Go and lose money to practice. But at the end of the day, the stats show the more someone trades, the more likely they're not going to succeed in markets. Okay. And I'm talking about like high volume, constantly trading in and out of markets versus just like being patient, waiting for the market to come to you, then entering. Okay. Setting a tight stop or a stop loss somewhere and figuring it out along the way and letting that stop get hit if it gets hit and adding to a position if the market's confirming that you're right. Okay. Let's play it out a little longer. Interesting. Okay. Now here's what's interesting. Notice that for just a second, we almost had a very bullish deal. Let's go back a little bit further to like right here. Okay. Right here, we had a slight break above. Notice that? I wonder if volume confirmed it. Not really. It's just really kind of declining and chilling, right? Just about average. Very tight still. See all these really small volume bars here? Very below average. Okay. But look, price broke above. So if you didn't use volume, okay. Oh, look, tanking above red line, Keynesian. However, what do we see here? We still see a red cloud. The lagging is above. So we're starting to get 1 to 2 positive signals. We're getting a positive signal right here. Price just broke above. Lagging span is now outside of price, right? Tenkins just above the Keynesian. But look, this guy alone tells you, hey, I'll wait. Wait for confirmation. Let's play it a little bit further. Still kind of bullish, right? Lagging span, perfect. Immediately break right back below. Honestly, I always short sell these moves anyways. If price breaks just above a range high and then breaks immediately back down, I always love short selling that. It's a nice little bull trap. And then look, we still have a very bearish, not very actually, the other stuff's very bearish, but we still have a bearish cloud. Okay. And now, right, even with the Tenkin here, it's not being supported there. It's being supported, I believe, at the cloud. Okay, right here. So yes, the cloud can act as a support and a resistance as well. And so let's just wait a little bit longer. Okay, now look, here's what's interesting. Cloud officially flipped bullish. Notice that the lagging span is outside of price. Good. If you want a long, that's above price, right? In previous price action. And the Tenkin is above the Keynesian, but look at price is below the Tenkin. Do you still buy? No. I want price to be above both. I want Tenkin to be above Keynesian. I want a green cloud. I want lagging span above. Okay. All of these factors, if they align, it's a good trade. Notice supported at the Tenkin. We're starting to get there. Cloud is good. Price is above. Okay. And what do we see here? Within that day and that day, not only did we see a break above our prior range resistance and a break above our next range right here, we got a new high, Lagging span, let me remove that line. Just the tool alone tells you long. Actually, even before I would have up here, which is funny. I would have longed this thing at, I did. I remember longing it like 71 to like 72 in this range here. This thing would have given you a good signal at 67. Everything is bullish now. Everything. Green cloud, price is above range high. Price is above Tenkin. Tenkin's above Kijin. Lagging span above price. You play that long. And you can hold and buy into a retrace on the blue or red line. Cloud is getting thicker as price moves. Lagging span continuing to stay above price. Play that out. Look how long you would have held that for. Even on the major, there's a lot of volume that occurred right here. See that? Huge spike in sell volume. You still would have held that. Price is still above the Tenkin even. Okay, lagging span. Once lagging span starts to enter price, that's where I get a little bit more cautious now on trades like this. Okay. Like right around here, I start to get a little more cautious. I take a bit of profit off the table, to be honest. But look, you would have made quite a bit of money into that trade. Okay, especially if you're using just a slight amount of leverage, not a ton. And notice right here, RSI well into the 85 range. Look at, why would you short sell that? I wouldn't short sell that. You're going to get wrecked over the next couple weeks. Right? Even with it, what? Overbought. Strength begets more strength. It's kind of like that old phrase, like the reason Jesus said, don't worry about anything. Tomorrow has enough worries about its own. It's like, why? Worry begets more worry. You attract not what you want, you attract what you are, right? The more you think about what you don't want, the more you get what you don't want, right? So think about what you want. And in the same manner, it's like, I think strength begets more strength. And I found that to be true. So it doesn't mean that like this move is done or that we won't see more highs when we did. It just means it looks like it's ready to kind of chill out for a bit with the lagging span now, entering price. And so it's likely you get supported here. You start to play in that range, right? And we know what happened. Look, let's see what happened here. Notice, little slightly bearish. Okay, we're still hanging out at the cloud. The cloud could act as a support, and it did, right? Does it act bullish at all? Starting to get a positive signal. We're flattening out right here and support. Look at blue line is directly on top of the red line is interesting. Slightly good and no, stay away. Right here, honestly, with a double top, lagging span continually staying in price. Now, for the second, third time entering the cloud, it's likely you're going to get an edge to edge move on the cloud. Okay, there it is. Support at the cloud. So it's a really interesting tool. And honestly, my first signal is usually when lagging span enters, and then I wait to see what happens at the 10 and 20 EMA. When you get a huge, or not 10 and 20, sorry, I'm thinking that when you get a Tenkin Kijin, move in terms of support. So that said, it is one of those things too. You have to remember, like all things, whenever you deviate away from a major line, or you get a deviation on these two lines, notice how big the deviation is between the red line and the blue line, how huge it is here versus like back here. Whenever you get this type of stuff, again, what does that mean? Expansion. So what ends up happening after? More often than not, contraction. So whenever you get these huge moves, yes, not a bad time to start taking profits, especially if the lagging span's entering price. Okay, and just a little. You don't have to do everything. Watch it closely. Does it bounce? Does it support? Does it break down? Get out. Right? Take your money. Yeah, I mean, it's not as strong as Bitcoin. It's similar to Ethereum. Price action looks slightly different. Not as strong as XRP currently, but very similar to Bitcoin in the fact that, yes, it is currently in a downtrend. I like this pattern right here. I'd like to, at this point, a lot of the move has been made. I would wait for what happens with Bitcoin. Do we retrace a little bit? But I wouldn't buy here because it's possible it retraces right back down to 132. So it really depends on you, 132 to like 127. If it breaks above 145, you also have a decent amount of resistance right here between 155 to 162. So, me personally, I'd wait since the majority of this move has already been made. I would have been buying just above 128 right here, right? And these wicks gave you a signal beforehand. Notice the demand is greater, no new lows. Look, wick, right? Higher high. One close here. This guy alone. So you probably didn't have to wait for this guy. You probably could have started entering right here with a safe stop loss just below 118. But if you're not in this already, like I'd wait now for 145 and watch that closely and then make a decision from there. So, what's the difference between stochastic RSI and the RSI? RSI is the math is slightly different, simpler. Stochastic is a far faster moving average. I don't touch it. I don't like it personally. Um, but you can do the homework on that, right? Literally go to Grok, go to ChatGPT, go to Anthropic Claude, ask the question. I mean, there's probably an article directly on Investopedia about it. So, and it'll show you why they're different. Me personally, I don't love using it unless it's a massive time frame. But at that point, like I already know what I'm looking at, just by looking at the chart and price action. I don't need a stochastic. It just gives you extra confidence sometimes, right? If you're like, oh, did it flip over? Is it really low? Is it, like for someone to keep things simple, that's fair. I don't like it personally. I don't use it at all. You said, okay, so great video. Today's comments, current situation in America is, yeah, of course. And I don't know if I'm right or not. I just think it's going to be hard to beat the US now in a lot of arenas. Especially if you think about it this way, right? If we do take, and this is kind of the coolest thing I can think of, I think Trump kind of knows, and they're looking at the numbers that like in the midterms they're gonna struggle. I think they handled the Epstein thing really poorly. I think everyone thinks that. It's only Democrat hoax when it was a promise before. In midterms, usually the incumbent loses anyways. So because of those two factors, and because prices and inflation have remained relatively high, and they also want to decrease interest rates, nothing was really in the favor of Trump being in a strong position into the midterms and the Republicans. So to me, it's like you have to kind of make a last ditch effort. What do you do? I think one of the smartest plays they could have ever made is Venezuela. And you have a really good story, right? Here's a dictator that's been in power, and the people do suffer. So for that reason, right, let's go essentially remove a dictator, and then it's like now you have access to this oil that we're going to run that country. And I think it's going to be like that over the next decade. Maybe, unless there's revolution or something, I don't know. But the way I look at it is the people are happy, and 303 billion barrels of oil. If we did even just a small portion of that into our economy, and we are able to lower, I looked at some stats, we might be able to lower the cost of fuel by 70% moving forward, and be less dependent on other nations. And if that is the case, think about the cost of goods and services. Okay, just the cost of manufacturing. And so bringing manufacturing down while you're bringing in tariffs, keeping prices relatively low like they would if you were buying from China or close to that. To me, all of that is just extremely bullish for the economy, and for the voter. And so my perspective on all of that is like that was one of the smartest plays he could have done. Period. And it looks really good. Like, some people don't like it. I live in Portland, Oregon. We had like a group of 100 people protesting. I'm like, you idiots, go live in Venezuela. Like, like they just don't like Trump. They just hate him. And listen, there's a lot to love about him. There's a lot to not like about him. I don't even care about that. I look at it and say like that was a really smart play, and it is good for the economy long term, even in the short term. So, silver and China's leverage on it just fell. I agree. Lots of earth minerals, rare earth minerals. I agree. Can you show us the setup? I did. Are you talking about right now? Still bearish, right? Even just on the Tenkan Kijun, but it's tightening up, so it's not giving us a direct signal right now. Let's look at. I'm willing to bet it's also a bearish cloud. We'll find out in a second. And the lagging. So lagging entered price. Price is below. I would like to see it break above on Solana. Oh, that's Solana. I'm so funny. I would like to see us get into the cloud and for these guys to start to turn bullish. But right now it is bearish still. So even the Ichimoku would be keeping you away from a trade like this. Me personally, because I know what I know, and you guys should be able to take some trades like this. You could have entered for a long at 90. So this is a slower system, which is why I would only use it for maybe bigger moves or investments. But in terms of like trading, right? You could have made a nice little chunk of change between the 90,000 level, and you could probably take that somewhere into the 100 to again above this range high at 107. So there's a lot of ways to play the market, right? And so for that reason, you have to think about it. There's even more ways to lose money in the markets, which is why you really have to practice good risk management. Okay, hope you guys enjoy it, and I hope you guys learned a lot. The settings are okay, 20, 60, 120, 30. Just use it on the daily, and we can cover different time frames at some point in the future. Okay. All right, guys. Thanks so much for hanging out. Appreciate the call, and I will see you guys next week. Just watch this range closely, 94. If you're going to be buying on a retrace, honestly, not a bad time to buy at 90 to 91,000. Okay, 89-ish to 91,000, I think is a good time to add to a retrace. If you break right back below to 87, that's dangerous. Okay. So watch those ranges closely. That will be your indicator for the rest of the crypto market, period. Okay. Some look stronger, some look weaker. Doesn't matter. Bitcoin starts to do bad, they're all likely going to do bad. And I've yet to be proven wrong on that. It's not about me being proven. The market has constantly shown that to be true, I should say. So even in this current environment. So thanks so much for hanging out.